Hello everyone, welcome to my YouTube channel Grow As We Go. I am Koina Nahar, currently in my third year of BA Economics, and through this channel I invite all of you all on a journey together with me wherein we will understand and learn about the stock markets by picking my dad's brain, who has been invested in the stock market for over 26 years. So let's grow our knowledge bases together and go through every single phase of the market with confidence. So good morning everyone, welcome to my channel. Today we have Papa Mr. Pawan Nahar as a guest, and today's video is about fundamental analysis as a beginner. So Papa, the first question is, I am a beginner. If I am entering into stock market, what should my first week, month, day look like? What should I be doing?
Since you mentioned a beginner, let's say a student, I wanted to mention that there are two types of students, right? And I want to take good examples. One was Arjun, the other was Eklavya. And in life, there is only so much or so far that a guru can take you. Beyond that, it is self-learning, self-drive, right? Now coming to your question about what should your first day, first month look like? Something I've been mentioning over the years, which is every day you must be connected to Mr. Market. Every day. How do you do that connection? How do you make that connection? Read newspapers and talk to practitioners. So I've always mentioned that my office is akin to Harvard for you. So I'll stop there. So you have to come there, you have to sit, spend time, strike a conversation.
Okay, and what about people who don't have a family member in stock market?
So there comes the Eklavya.
So they should read the papers.
Newspaper is a must, right? And I repeat the phrase, Eklavya. Arjun, Eklavya. So think, since you have access to Guru, right? So you are in the position of Arjun, but there will be many Eklavyas who will do better than you, right? Because that self-drive. And if you want to, again, self-drive. So newspapers. And now, because of YouTube, like, when somebody asks me a question that I would like to meet Mr. So-and-so, particularly the colleges, right? Can we invite Mr. So-and-so? I have started saying no. Reason being that there are so many interviews of these gurus whom I am listening to all the time, every day, right? So there is so much content out, right? Yes, the guru can be, after listening to the videos, you can do a Q&A with the guru, but for that you should have spent so much time. So for the Eklavya, the thing is there is so much content on YouTube, on X. The transcripts of management conference calls are available on many websites like Screener and many others. So there is so much and more content now.
But what should my search be? I am used to stock market.
So in the beginning, do not search for a particular thing. There is no secret formula, right? You are just reading, and it will take you maybe a decade. Don't think that you need to master one stock. Don't think that you need to master one market, right? So this is like the universe, the Brahman. Don't aspire to master anything in 1 year, 2 year, 5 year. It will take you more than maybe 2 decades, maybe more, and still we make mistakes. So I repeat, do not aspire for a particular thing. Stay connected to Mr. Market, observe, and then even better if you begin to write. So that over time, patterns will emerge. Over time, you will begin to connect the dots. So this is the ultimate truth. Now, if you still want, what are the points to look at? So in every book that you read, you will discuss about, or they discuss about ratios. Again, don't look at the ratios of just one company. I would say not even just one sector. think of it like a universe, right? Because ultimately as an investor, you aspire to get the best, right? And when I were to talk about, when I have were to talk about ratios, I would say, most of these ratios would deal with return on equity, return on capital. Yeah, if I were to use just two broad things, get to the source of that. What is the, factor that leads to that better outcome? So that, by that I mean a DuPont ratio, right? So let's say a DuPont ratio is mostly used in banking, but then we can do it everywhere. Actually, sorry, it can be used everywhere. And what does that formula say? It says that you look at how much is the asset turn of a business. So capital intensity. It captures the margins, over the years, how that is changing. It captures the tax rate. So if that is the source of the ROE, and then it captures the leverage. But this is one side of, historical analysis. What Mr. Market also looks at and rewards is growth, right? So then you need to have a perspective about what is the total addressable market of a particular company. What is the, positioning of that particular company, right? So when I talk about growth, I would also like to mention that there are two types of growth. One is a linear growth, which is in line with your nominal GDP, maybe some market share gain. Market loves to, there is a style wherein you also want to find companies that will be non-linear in growth. And that is rewarded even more handsomely or beautiful, right? So one is ratios, the other is growth. Within growth, you need to find the patterns, which is a company. And again, a lot of this will come by watching the company over history. So if you want to short cycle that, you read 10 years, you read all the transcripts. What did they say? How did they behave in a particular cycle, up cycle, down cycle? Did they get carried away? Did they get too, risk averse? And then try to see which bucket would you like to put it. This is a linear growth company. Okay. And is this a non-linear growth company, which is optional?
Okay. So these are qualitative questions. Basically, so if someone comes to me and asks before exam, how should I study? So I would just say, read the book, 300 pages, just do it. So similarly, you know it. You have done it for 26 years. So you're playing around with formulas. You're saying you should do this, you should do that. But I am just starting out. So firstly, how do I understand a company? And when do I know that I've understood it? 5 years, 10 years, how much is enough?
It is never enough, number one. And I go back to the first point I made, that you just have to be connected. You just have to be observing. Don't aspire to master any particular company within a month, 1 year, right? You observe. And I'm saying that you try to broad base first. So don't just go vertically deep. Don't just go horizontally wide. Try to combine it. Read about one company, read about the sector, read about multiple other things happening in the market. So as a student, see, what do I expect from a student? Or what do I expect from AI? AI to me is assistant intelligence. I repeat, assistant intelligence, right? So I want from you is that you are able to answer basic questions, right? You are able to, you are observing. You are also reporting with some qualitative edge that you gain over time, right? So that in the professional world of investing, they don't make you a fund manager on day one. They don't even make you an analyst on day one. You are just going to be assisting, right? It takes long periods of time to become that fund manager, and then also we make mistakes. So again, I'm repeating, don't aspire, don't get fixated to complete a particular company, a particular sector, right? You just stay connected.
Okay. Ratios. So commerce students, we know the ratios formula. But how do we set the context? How do we make sense that, okay, for this company, PE ratio is higher, so that means this. So which ratios are more important? And how, when we are starting up, how do we set the context for balance sheet, profit and loss? So I can see, yes, that cash flow has gone up. But how do I make sense of it? And how do I use ratios in those statements?
So, part of this I have answered. What I'm trying to tell you is, again, let me repeat, there is no magic formula. See, when you talk about equities, it is not a science, right? Here, there is no input output. Okay, there is only one input. There is only one truth here, that over time, good inputs or your effort will lead to good outcomes over time, right? But otherwise, there is no particular ratio, there is no particular formula. It is, the entire universe that you need to try and understand. Now, coming to, let's say, within income statement, right? Let's say within a company, let's talk about a particular company. I mentioned ratios, I mentioned growth, right? So you want to understand, don't get too fixated about ratios also. Try to understand what does this company do, right? Which I expect that a person like you who's been watching me or having a conversation with me would know broadly, right? Let's say you were talking about Hindalco. It makes aluminum, right? How does that process work? Where does it get the raw materials from? Do they own the raw materials? First, try to understand who are the competitors. Do they operate on similar, business model? Like somebody, let's say I were to talk about steel, right? A Tata Steel owns its own iron ore mines, right? A SAIL owns it. A JSW was not so fortunate, but they've been very efficient. So you need to understand which company is, break it up into smaller parts. For how long has the CEO been there or the promoter been there, right? Have they been, always a linear growth company, or they have taken to non-linear opportunities, growth opportunities, acquisitions? How did they manage the risk, right? Did they control the leverage? Did they take a lot of leverage? So from every angle you try to understand. Then in terms of, so one is let's say the cost of operations, etc. The second thing you should is on the market side, the growth side, right? What is the positioning of the company? So even, within commodity, let's say a steel made from Tata Steel will always fetch a premium versus a steel made from some ordinary company, right? So you want to understand the product's positioning or the brand's positioning in the market. Now, I have told you this in the past that a brand has a lot more meaning in a country where quality is not trusted, right? Because quality is essentially a regulator's job, apart from the corporate's job as well. So when the quality is not trusted, that whether the regulator, like in medicines, we've seen that, we see this in food, then that is where you need to understand the brand's positioning, because then they can charge a premium, right? And so how do they score on the pricing? How do they score on the costing? How do they score on leverage? How do they score on non-linearity or linearity, right? Are they global? So just break it up into multiple parts.
How do I break it up? What I want is like a framework because I am starting out. So what is my homework for day one when I'm starting out? So I understand, you understand the company, you do not invest, you try to analyze, you try to write what you're reading. So you said read about the management. How are they holding up? How do I read that? Because 300 pages, and all companies will always say, oh, we are very good, our management did this, we did this. So I am starting out. I don't have 10 years of experience that they did this 10 years ago, but they are not following up right now. So just starting up, how do I even come to know whether it's a good decision, bad decision? How good is the management?
So number one is that it will take more than 10 years. Number one. Number two, there is a lot of historical context which is available, right? Number three, a lot of corporates nowadays do Q&A. So the moment you are reading or from you I expect is to read. You know what are the questions which all the people who are tracking Mr. Market is asking them, right? So you will obviously, when you read 10 transcripts, you'll know that these are the relevant issues in a particular company, right? And then when you begin to read the peer group, see, there is no absolute truth, right? Just reading one company will not help. But I've told you, you need to read let's say the transcripts, and don't need to go, I mentioned again in the beginning, you don't need to go completely deep at the start. I don't expect much from you. I just want you to read. I just want you to make notes. I just wish you to share those notes, right? Factual reporting. Okay. And then you read the peer group, then you'll see magic begins to happen. So instead of worrying about what, just dive into the pool. You have to jump, right? And I told you have to read the transcripts, right? Company one, peer group, make some notes.
Okay, to get my skin wet, I need to read
You have
the
to jump into the pool.
conference of my company and the competitors, and then move on to management discussions. Aside from these two, is anything else important?
So you look at ratios, you begin to compare the peer group on ratios.
Okay, any particular ratios which are
I
important?
have mentioned this again,
All
right?
ratios are.
All are important, but then ultimately we will judge a company on efficiency, capital efficiency and growth, right? Capital efficiency and growth are the two secret sauce, right? So let's say you want to compare which is the most capital efficient. So how do you compare capital efficiency? It is ROE or ROCE, right? And then you want to understand the breakup, the sub part. So, right, what drove that ROE? What drove that ROCE, right? Was it that a company has a lot of working capital? Try to understand why, okay? Versus peer. So that's how it is.
Okay. Number two, about numbers. Now, PEG ratio. Then also, basically, they are projecting DCF. They are projecting future goals. How are they doing that? And then even you put targets on share that I want this share to go up to 800 rupees. Like I understand you know the direction that the company, the share will go up, the share will go down. And how do you quantify exactly how much will it go up or down?
So first of all, that quantification is a moving target. It goes, the target moves up, target moves down, right? As the scenario unfolds. Or as I learn about my mistakes or what I missed. So that target is always moving. I don't take that target, but it is a guiding force for me, right? Remember, I said that market is combining two factors, capital efficiency and growth, right? So anything that gives me good on this, and then the third factor as an investor you want to is what is the price I'm paying. These are the three things which you will be combining, right?
So first two, I understand their ratios. Valuation, how do you decide this is undervalued, overvalued, or just right for you?
So again, one is to look at long-term history. How did this trade at, right? What has changed versus the long-term average of this particular company in terms of ratios or growth, right? Where is it now trading at? What about the peer group? What about Mr. Market in general, right? So you try to combine, and then eventually, one thing which you always look at is what are alternate opportunities likely to give to me. But look at it like this, right? You buy something to make some return. Forget valuation. You buy something to make some return, right? Now most basic you will do is you will look at the government bonds, right? Or you will look at corporate bonds, right? They will give you a fixed return over a particular amount of time. The tax rate you need to keep in mind. Then you see, are you getting a better deal elsewhere, right? Which is, let's say, to keep it simple, equities, right? So if your government bonds are trading around figure, let's say 7%. Now, if equities are trading at less than 15 PE, plus there is that growth optionality that is built in. And for a moment, assume taxes are same on dividend. Yeah, actually it is now same. Pretty much same. Interest and dividend is pretty much on the same bucket now. Yeah, it is the same bucket, sorry. So If it is less than 15p, and you know that generally if there is a corporate which over time is growing, you definitely want to go here, right? That means you're always willing. Second point is you're always willing to pay some amount of growth premium for equities, right? And then you will over a thing, let's say if you can see that this company over 5 years could grow at a particular ratio, right? Then you want to just look out 5 years, what is that valuation multiple implying versus, let's say, the bond yields.
Okay. Next
So
question.
it's a comparison. So if you look at equities, it's never absolute. It is always a comparison. Comparison versus peers, comparison versus alternate assets, if you can measure.
Okay. Next question is news. So if I'm reading about a company and you said I have to read about what does it do. So what does it do affects me only if I know the current news.
No?
For example, if bauxite.
Oh yeah, you have to, yeah, so you have to go in circles. When you are talking about, this approach, you read about a company, you are reading about the news, you're moving in circles. Don't try to go too deep in one particular aspect on day one. You just go in circles, right? And then over time you begin to connect.
Okay. Anything you can share that this news seems important, but this news does nothing to the market. So it's confusing. So can you share?
So, your question is wrong. I think this is a serious problem that on day one you want to be a champion. That aspiration, that desire is wrong. On day one, you just want to swim. You not even swim. You just want to go into the water, right? And the moment you are in the water and you have to do that every day, first do that and then you will see the magic. So, what I want to mention, since you are a student, your aspiration is to be like, the ultimate on day one. How does that happen? It cannot happen. That aspiration, that question is wrong. You have to jump into the pool, go in circles.
Okay. According to you, what should my homework be for day one? Like, Papa, give me a framework. So you told me you don't have to be a champion. You just have to get your skin wet. Eventually, you will learn how to swim. So what should I do exactly? Like a target. Give me a task.
So let's say there are two types of students. One is Arjun, the other is Eklavya, right? For Arjun, the thing is very simple. Come to the office. Now, you know that I've been mentioning. So what I will be telling you today is what I have been mentioning over the last maybe 10 years, right? So you come and talk to Mr. Market, one. Two is Mr. Market is also the newspaper, right? And in the newspaper, particularly, you want to read about the opinion columns. You don't want to necessarily read so much about news, right? Because news is something, okay, there are three, I want to repeat a particular point, which is there are three levels. One is news, the other is knowledge, the ultimate is wisdom, right? So news is something which is passing every day. It is changing. The numbers are changing. The stock price is changing, right? You have to be connected to that. You cannot wish away. Second is knowledge. All these ratios, right? What the company does, etc. The third is wisdom, right? So wisdom is what? If you look at the world, it is all about greed and fear. So this greed, fear, envy is what drives GDP, right? Global GDP. So news, knowledge, and wisdom. So news you have to keep watching. Over time, like now you notice I'm less interested in news. I'm more interested in, the other aspects. I try to use wisdom more than I try to use knowledge or news, right? So you graduate over time. Well, what does wisdom say? So news is news. Knowledge is all these ratios, etc., multiples, valuation multiple. Wisdom is like, do I really want to do business with? Think of investing as akin to doing business, right? Think of buying equity of a company as much like giving loan to a company. Do I really want to have exposure to this particular company? Right? Whether it is the business or the management, because now you would have seen multiple businesses. You would have seen multiple managements. You would have a sense about how this management behaves, how fair they are. It's okay to take risk, right? Perfectly okay to take risk. But you want to take risk with a promoter who will be fair to you when things go good. I don't expect him to do something for something great when things are not going good, right? I want him to show some love towards minority shareholders. So wisdom is about the cycles of the market. Is there too much greed right now? Is this management good? Can I trust them? Are they that non-linear type who will always keep cash waiting for opportunities to jump? So if the price is right, so you want to apply those framework more than, today this news. So don't chase that.
Okay.
As a beginner, don't try to, all this, you just jump, you just swim, right? With small amounts.
Okay. Still a homework for me. So I have.
Okay, sorry, this was for Arjun. This particular thing was more for Arjun. For Eklavya, right? Eklavya is any day going to beat Arjun, right? It means, okay, somehow the entire system, got together to make Arjun win, right? But Eklavya, newspaper, obviously, transcripts, YouTube, I mean, it's like an ocean. I am short of time. Every day I'm short of time. There is so much of good content available.
Okay. Can you give a homework to us, like I said, like this newspaper, just a starting that you start with this YouTube channel, and third you said transcript. So can you just give us one company or sector so we actually start?
You choose your company, whatever you know. Let's say you are consuming a product of a particular company, whichever company you are comfortable with.
Okay. YouTube channel?
There is no one channel.
To start.
I would say, I wouldn't like to use name. There is so much out there. There is just so much out there.
So what should we be searching? How to do fundamental analysis, how to get into stock market?
Okay, you can listen to the Indian fund managers to begin with.
Indian fund managers.
Yeah.
Okay. And third was any particular newspaper?
So I would say newspapers, Business Standard, like nowadays I read less of newspapers because I'm already so much involved in this market. Over time, you begin to develop your own opinions. And many a times these people who are writing these opinion columns are, practicing investors. You can listen to them on YouTube or X. You can read them. Business Standard is good. Mint is good. Yeah, these two newspapers should be good.
Okay, so our homework is Business Standard, Mint, Indian fund managers, and we should start reading about any companies, con calls that we like.
That's true. That's true.
Okay.
So if you were to ask me names of two fund managers, I would talk about, let's say, the, what is the right cricket names to use, but legends for Indian, right? There may be people who would have scored better than, etc. But then there are a particular set of people always stand out because they were the stalwarts who actually built that industry, right? So I would mention one is Mr. Prashant Jain. The other I would mention is Mr. Sankaran Nare. These two names I would mention. Okay. And it is not to say that these two are just enough. You want to explore the entire world. Yes.
Okay. And last question, fundamental analysis. Based on your experience, just summarize it, explain it, fundamental analysis.
So I have already mentioned fundamental analysis to you, right? The reading about what a company does, reading the transcripts, the Q&A, then trying to do a comparison versus peer group on ratios, trying to understand why these differences. Why does a particular company have to give more credit versus another company, right? Is it yielding some tangible benefit in terms of more growth? See, if you're giving more credit, it should mean more growth. It should mean more ROCE, right? What is that? Try to understand why.
Okay.
If a company has more, creditors, why? If a company, is the depreciation ratios are different. Okay, why? A great way to do this would be every day, that, or every week, You know that these were the 5 big moving stocks up and down. Try to read about that.
Okay.
Right? You can do it on a daily basis. That's like you're connected to Mr. Market. You know what is the news, what drove that, right?
Okay. Thank you so much for the first video. Any other points you would like to add?
Oh, good luck. Thank you.
Thank you.